Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very good day. And in today's markets, guys, well, we didn't have very much in terms of macroeconomic news. So no news from the economy in terms of inflation either, and no geopolitical negative headlines either. So the bulls doing what they do best, just grinding these markets higher and pushing our daily uptrends further and further to the upside. So in today's video, guys, we're going to go over a few key things. Number one, we're going to start it off with some earnings. We're going to cover three companies that reported earnings yesterday. Those are going to be Shopify, Robinhood, and the Trade Desk. Since there's no notable earnings today, I figured that we could do those from yesterday into today's session too. So we're going to start off the video with that. Then we're obviously going to go into our major technical analysis rundown in terms of our major indexes, and then our big tech names, and lastly conclude with the trades that I made today for the setups for tomorrow as well. So without further ado, guys, let's get right into today's video. So the SPY up a very healthy 0.58%, QQQ trailing a little bit behind here at 0.22%, but overall very nice broad market rotation. Even our other two major sectors participating today heavily, financials and healthcare, having a very, very beautiful day. In terms of our heat map here, guys, you can see that really it was a question of a broad market rally today. Most of our heat map is indeed to the green side. So the bottom half of the market having some good participation. Semiconductors pulling slightly, ever so slightly back today after their very nice return to green over the past week. And our big tech names, guys, well, although there wasn't any major outperformance, for the most part, holding up the market fairly well. So it was a very, very decent day overall. In terms of our one-day relative performance too, you can see that everything was really in the green, led notably by real estate. And now on the one-week relative, guys, the markets are looking very healthy, multi-percentage point rallies back in terms of all of our major sectors. So once again, as I've said in previous video, guys, it's going to be very tough to derail the bulls in a substantial fashion without some persistently negative data. So that being said, guys, before we jump into more technicals, let's jump into some earnings right away. And we're going to start off with our first company, and that's going to be Shopify, guys. And as usual, I know these videos are pretty long, so if ever you want to skip through the earnings section, I always leave the timestamps down below in the video, so feel free to click forward to the section that you prefer the most. So in terms of Shopify earnings, guys, well, you guys obviously know by now, they were down pretty much a whopping almost 20% after their earnings and still relatively bottomed out right now. So what exactly happened with the company? Well, let's take a look. So our EPS, we did have a good beat in this quarter of about 18% on EPS, and revenue came in at about 1.5% to the upside. Now, the problem, guys, was this EPS is not their GAAP EPS. I know it shows a positive number, but they had a few one-line items that actually made their earnings negative for this quarter. And that was the struggle with this company, guys. Shopify has been a company that has often in the past struggled with profitability. Take a look at their past few years. You can see that leading into the pandemic, barely profitable as a whole. Pandemic year was very good for them, but as of most recently, the last 2 years, they continuously struggle with net margins. Right? Even in the past few quarters, you can see very, very inconsistent performance in terms of Shopify for that profitability. And you can even see here EPS, although it will be growing 2024 through 2027, it's been very, very choppy recently. And you can even see that best expressed in their quarterly performance. It's just not that consistent. Revenue, however, is showing a more consistent trend to the upside. So the question of this company, guys, is always going to be a question of profitability. And the markets really did not like the reaction to the following headlines that I'm about to show you here. So let's take a look into the article. Shopify earnings topped estimates. Why the stock is on track for the worst day on record. So Barron's does a great job of recapping exactly what happened. So that's why we're going to go through this article in a bit more detail. Shopify stock was plummeting Wednesday after the e-commerce company swung to a surprise loss in its fiscal first quarter and warned that the sale of its logistics business would weigh on the second quarter revenue growth. So that logistics business, guys, if you don't know what Shopify does, Shopify is an e-commerce platform. They are pretty much an all-in-one solution. If you want to launch a business, they'll provide you the tools to set up the website, potentially advertising tools as well. And they even have a payments platform that you can integrate payments from your customers into your PayPal account or into your Shopify account just as well. However, Shopify 2-3 years ago thought that it would be a good idea to building on that one platform solution for customers to try and replicate what Amazon did as well and try and provide shipping for products for websites that are built on Shopify. Obviously, guys, the logistics business is a very difficult business to get into. Just ask FedEx, UPS, or Amazon, guys. They operate on very, very thin margins, and it's just a very tough business to pierce into to try and gain some market share, right? It's a very costly business. So about 6 months ago, they pretty much threw in the towel. They said that they were done with that phased expansion into the logistics network, and they've been divesting that side of their business ever since, and that has been weighing on their financials. So let's continue. Shopify's adjusted earnings, which exclude one-time charges, came in at 20 cents a share. That was the positive EPS that I just showed you. However, the company posted a loss of 21 cents a share, while analysts had expected the company to post an earnings beat of 9 cents once those charges were included. So, company posting negative accounting EPS, that was not expected by analysts, which is why you had a heck of a tumble. But the damage doesn't stop there. The loss stemmed from a series of expenses, including new marketing initiatives, said Shopify's president. Now, Shopify, over the last 2 quarters, have been saying they are going to gun for cost control, and focus on profitability. So obviously, it was to Wall Street's surprise and everybody's surprise when the CEO basically said, yeah, we're going to spend a lot more money on marketing than expected. Wall Street just did not like that, especially when the company is supposed to be focused on profitability. Here's what the CEO had to say about this. When we see opportunities for us to double down on marketing or areas of the business that we think will lead to really great growth, particularly in the next 18 months, we're going to take them. That's what the president said. I can't blame them for that, guys. They have to do what they have to do to expand the business. But in terms of the share price, it definitely didn't favor them, right? So here's your guidance for the second quarter of 2024. Shopify said revenue will grow at high teens percentage rate from 1 year ago. Analysts are currently forecasting sales would increase by about 19%. So high teens, you can think anything 16, 17, 18, 19. Analysts were dead set on 19%, and high teens is under 19% for the most part, or they just would have said 19, 20%, right? So miss on guidance, higher than anticipated marketing expenses, and the one-time loss from their sale of their logistics business, all those 3 things, guys, impacting the company to the downside. The company noted that revenue would have grown by percentages in the low to mid 20s had it not been for the sale of its logistics business. Now, second quarter gross margins are still expected to decrease slightly compared to the first quarter. So add fuel to the fire, not only as the 3 elements that we previously described going down, but they're also now taking a hit in their margins. Not very good for a company that's supposed to be focusing on profitability. Now, here's what one analyst had to say, Charlie Miner. Despite a strong Q1 report, which is true, the forecast for margin contraction and lighter than expected Q2 revenue is sounding the alarm bell for investors. Now, the CEO acknowledged that the market likely had some concerns about Shopify's ability to continue this growth, but he said the company has a ton of growth drivers. He pointed to the company's gross merchandise volume, or the total value of orders processed on the company's platform, which jumped 23% from a year ago. That is relatively good. Now, the CEO also highlighted the company's free cash flow margin, which reached 12%. Total free cash flow was $232 million. And that is true. At least, guys, they are growing this free cash flow element, and their balance sheet is strong. Not a lot of debt. They have a lot of cash. The problem, guys, is that this isn't enough. We want to see EPS expansion, and we want to see continuously consistent net income margins, something that the company hasn't been able to consistently deliver for 3, 4, or 5 quarters in a row at this point, right? So let's finish with the article. Outsized growth of the lower margin payments business is resulting in short-term margin compression, a major concern for a company that came into earnings with one of the weakest gross margin profiles among any company in its valuation range. I do agree Shopify's valuation is not the cheapest. So when you have an expensive valuation, guys, you need to show Wall Street that you're able to deliver consistent growth, or they will not give you the increase in stock price that you're looking for. So all that being said, guys, let's take a look at Shopify's valuation and in terms of the technicals as well. So let's go over the valuation first. Let me just pull it up real quick. So 2024 EPS of about $1. It gives them a PE at $62 right now of about 62. On its own, that seems high, which is why we always use the PEG ratio. We divide the PE by the company's EPS growth rate, which gives us a PEG ratio of 1.77. I'll remind you, anything under 1 is amazing. Between 1 and 2 is okay. And over 2, guys, is a little bit rich. Them sitting at 1.77, guys, is not very cheap. Even though the stock is currently still down about 65% from the all-time highs, this is not cheap, right? In terms of your technicals, though, the company is on a very nice monthly uptrend. They have a lot of space here above 47 to set that monthly higher low. But the one thing that happened, guys, unfortunately now, well, the monthly is below here. We're below our moving averages, and we are also below this green box that I needed to see the bulls hold below all of your major moving averages now. So at this point in time, guys, I will not be playing this company until I can see them get a consistent daily uptrend back. As a whole, I still like the company, but at these valuations, guys, you need to be careful. It may appear cheap at a first glance, but it's actually not that cheap. So we need to be trading accordingly on this stock. As I said, I like the company, but to play this stock, I would need to see a nice recovery back up here into the 70s and then potentially play the retest of this zone to the lower side. If not, guys, if you buy here, you may end up with a nasty situation where we just set daily downtrends, continuously set the weekly downtrends, and really start hitting some of these lower levels in the 50s, right? So that is your risk. So please trade this one accordingly. So that's pretty much everything for Shopify. Now let's jump into our second company, which is going to be Robinhood, which actually performed much better. So Robinhood had earnings yesterday and they absolutely crushed it. I know they gave back most of the gains today, but at one point today, they were up about 7%, retracing most of that over the course of the day. But very, very good earnings for Robinhood. EPS, complete blowout, 211% beat on EPS. And a nice little beat, 12% on revenue. And we were saying this coming into Robinhood earnings, guys. Q1, right? They're reporting their Q1 earnings January through March, and we were in a massive bull run, not only equities, but also a lot of people playing stock options and a lot of people playing cryptocurrencies. Well, lucky for Robinhood, they cater to all three, so you would have expected them to have a very good quarter, which they really did. Robinhood not looking too bad. I'll remind you, the story of Robinhood has, once again, kind of like Shopify, been one of profitability, right? So if we take a look over here, you can see that on an annual basis, as of the most recent last year filing, they are still not profitable. However, over the last 2 quarters, they are now coming into profitable territory as trading volumes start to pick up, as this bull run starts to pick up as well. So very good increase by them. We need to see them maintain that consistency leading into the next couple of quarters, which I don't believe should be a problem for them, considering the fact that trading volumes should continuously increase. Now, the EPS here is fairly weak here, right? In terms of EPS expansion, so not very consistent. We're going to have to take this 1 quarter at a time for this company, but the revenue expansion over the next 3 years at least is quite decent. So let's look into a few of the headlines and a few of their investor slides. Robinhood climbs after reporting record earnings for the first quarter, and indeed it was record earnings for them, highest net income and best net margins they've ever had. They reported net income, so the bottom line profits of $157 million. That's a positive swing from the same period last year where they lost $511 million. So huge swing to profitability. Very good for the company. The company said the earnings per share and revenue numbers were both records for the firm. Very good. Stocks and cryptocurrencies rose during the first quarter, which likely helped the company's results, as we were saying prior to the earnings. Cryptocurrency transactions accounted for $126 million in revenue in the quarter. Very, very nice. And Robinhood said it has a number of its number of funded customers rose by 810,000 year over year to almost 24 million. Assets under custody rose 65% year over year to $130 billion. That's a huge amount for Robinhood to have, right? $130 billion. A lot of people have trading accounts on Robinhood, so it's nice to see their customer counts go up. Now let's look through a few of their earnings slides, and you'll see they are very, very good, guys. So look at the amount of funded customers. This just means if you have $1 in your account, you are a funded customer, right? So they don't want to look at idle accounts with no value. You can see the funded accounts are highly up. They're paid accounts as well, which give a little bit more premium features. Also to the upside, very, very good. Assets under custody, as we saw, about $130 billion. And net deposits, take a look at this, guys. This is your signal that the bull market is potentially in full swing right now. You can see last year was fairly dead for Robinhood, but really in Q4 and especially in this most recent Q1, guys, people are piling back into the markets. And I do think that that should continue as well. Now, in terms of your total net revenues, very nice expansion curve as well. Operating expenses, you can expect that to go up because they're making more revenue, right? A lot of these expenses are variable. When revenue goes up, obviously the cost of doing business goes up as well, but revenue outpacing those expenses by a wide margin. EBITDA margins are also up. And here's your beautiful curve from net income losses to net income profitability. Very, very good for the company, guys. Extremely, extremely strong growth metrics, right? They just dive in a few more charts here, just diving into the nature of the business for Robinhood, right? Your gold subscribers count up. I'm just going through these very, very quickly, right? Net deposits were a record 11.2 billion. There is people piling back into the market. Very, very good, guys. Nothing bad to say about the company. The one last thing that I wanted to show you guys is right about, where is it? Right here. Okay, so here is your breakdown of your transaction-based revenues. You can see that for the most part, guys, all the things are increasing, right? Equities, net increase positions. Options, net increase in positions. That's right up here. Or sorry, equities is down here in yellow. Your options is up here. It just goes to show, guys, how much money these guys make from options, right? Not a lot of people trading stock on Robinhood. A lot of people trading options, and crypto is going to be another big money maker for the company. So very, very decent for them. They're also making more net interest revenues. That just means that when you trade on margin, obviously you have an interest rate associated with that, and that is netly up for the company. Very, very good report as a whole for Robinhood, guys. Now, in terms of valuation on a company with inconsistent EPS is relatively difficult, but we'll do it anyways here. So in terms of the revenue growth and EPS growth through 2027, very healthy. Revenue growing at 10.2, EPS at 18%, double-digit growth across both of them. Like to see that. And then we have the 2024 forward PE at $17, which is their price right now, of 34. And when we take that as an expression of their growth rate, it's about 1.89. And I wrote down here, it is a little bit high, guys. I know between 1 and 2 is sometimes okay, but when a company is struggling with consistency, right? Usually that's when you don't want to pay the higher end premium for some of these companies, right? If a company like Facebook is trading at 1.89, I have no problem buying that stock because they deliver consistent revenue growth and consistent EPS growth and consistent free cash flow, and they buy back their stock. But when we have a company like Robinhood trading close to 2, it is still a little bit of a risky bet here. I personally would like to see this company. I don't know if they're going to come back here, but Robinhood would be, it was a tremendous buy, in these lower levels. I don't think we'll see those again, but if we can see maybe a 14 handle in front of the stock, that is when I'll be more interested in playing this company, as the valuation at that point will be significantly cheaper, right? If we come back down to about 14%, $14, that's about a 20% drop, and that means that your PEG ratio right here will be closer to about 1.5, and that's probably what I'm willing to pay for the company if I will trade it. But very, very decent earnings for the company as a whole, guys. Nothing wrong with them. The only focus, once again, is the consistency of the business. Is it a good buy here? Well, it could potentially go up, right? But we are in the business of buying things cheap when they're definitely cheap and when it's a solid company. This one is still, although it's a decent bet, in my opinion, it is still one of the more risky bets to be had. But I think the company should be performing fairly well in the next 1 to 2 years as the bull market continues, as trading volumes continue to improve for the company, and as they continue shooting for more profitability, right? So very, very decent earnings from Robinhood as a whole. And our last company we're going to look at is going to be Trade Desk. So Trade Desk coming in with their earnings yesterday as well. And the stock really didn't move after earnings at all. They just kind of really maintained flat. Even today, post earnings, they were only up about 3%. But as a whole, guys, Trade Desk had relatively good earnings. They beat on EPS by about 20%, and they did beat on revenue by about 2%. This is not a company that struggles with revenue or profitability, revenue growth or profitability at all. You can see that in the last 5 years, they have been net profitable. And even in the last 5 quarters, although their net margins are slightly inconsistent sometimes, at least they are still always profitable. Now, in terms of your forecast, right, beautiful EPS expansion curve right here, and also beautiful revenue expansion curve for the next 4 years, so no problem there. And in terms of the financials, guys, well, the financials are fairly good as well. You can see down here, not really much debt to be had whatsoever, right? $230 million worth of debt. That's almost how much free cash flow they brought in the quarter, and they're sitting on a cash pile of close to $1 billion. So their financials are very, very, very solid for this company, guys. Trade Desk, obviously a pure play advertising company, right? My preferred advertising play has to be Facebook, just because of the sheer dominance that they have over the entire markets. And also, don't really forget, right? Google and Amazon, their advertising divisions are also doing very, very well. So I tend to stick with the larger players. I liked Trade Desk stock, but I really liked it a lot better, guys, down here in the $70 range at $90. I mean, it's not cheap. It's not cheap, but it's also not very expensive. It's kind of right there in the middle. In other words, it's not the best deal out there right now. As a matter of fact, guys, if we're going to compare their valuation a little bit later, but I'll show you, even Facebook stock is a better buy at its current levels than Trade Desk. But all in all, guys, I can't say anything bad about their earnings. They did have a very good quarter. Let's take a look into that quarter. So Trade Desk Q1 earnings right here. So revenue, we obviously went over that. 28% year-over-year increase. Very, very good. Adjusted EBITDA, that's a margin of 33%. That is also very, very good, guys. Earnings margins of 33%. Fantastic. Adjusted net income, so their bottom line profit, 131 million. Very, very good. And their free cash flow that we went over, which is extremely good, remaining still positive. Now, let's take a look at some of their earnings slides just to show you how nicely they're growing as a whole, right? So Trade Desk, by the numbers, gross spend, so how much money advertisers spend on their platform. Consistently higher double-digit growth rate. Revenue is also the same. Very, very, very good. Obviously, the gross spend is not equal to the revenue, right? Trade Desk is a middleman. They basically are a market maker for ads. They will get with advertising companies that want to advertise on certain platforms, and they will make that market between the two, and then they will pocket the difference, which is what your revenue figure is right now. So very nice expansion by the Trade Desk as well. Extremely, extremely good. Nothing bad to say there. Let us just go through a few more slides. I just want to show you guys how many firms they currently work with right now, right? In terms of all the lines of business that they can potentially go for, right? And here's your ad exchanges, what they're plugged into to provide ads for other customers. And you can see this, in other words, is Trade Desk's competition. And they're competing with Microsoft, Google as well. I'm surprised that Facebook isn't right there, but maybe they have it in a different category, right? But still, very, very decent company. The one thing I'm worried about with Trade Desk is the competition. And here's something that I figured that would be fairly relevant, guys, in terms of advertising spend, right? So advertising spend, food and drink came in the most part. Then you can see automotive, medical health. Just take a snapshot of this list, guys, to see which of these companies are spending the most on advertising, right? Very, very key. You rarely get such good insights from companies. So potentially screenshot this because it could really help us, guys, in terms of determining which could be a few plays to potentially avoid, right? Or to potentially go after. So that is going to be a very, very nice list. I screenshotted this on my own for the foreseeable future, right? So very, very decent earnings by the Trade Desk. There's a few more slides that I wanted to show you. Then they're a bit lower, I believe. Give me a quick second and I'll find them for you. I should really write these down. So here's your a few more graphs, right? Robust revenue growth. They break it down by quarter. You can see no problems there. Substantial profitability. So here's your net income, growing chart of net income. That is exactly what you want to see, guys. So really nothing bad with the company whatsoever. My only gripe with the company is the valuation is a little bit high. So 2024 forward P at $88 right now is about a 57. On a first glance, this number alone is a bit high. That's why we use the PEG ratio. We divide this by their EPS growth per year, which gives us about a 1.96. Now, 1.96 is still under 2, which is, relatively okay. The stock is close to the all-time highs, but you know what else is around these same valuations here, guys? Around that 1.96 mark that makes a lot more profits than this company right here in terms of net income? Well, you need to look no further, guys, than the big boy on the block. That is Meta. Meta, right? So when we take in consideration Meta's PEG ratio, well, let me just do it again because now the price has moved, right? So now we're at about 475. So let's redo this. I'll do this live for you guys at 475 in case you want to follow along. So their 2024 EPS is right here at about 20.15. So very, very easy. All we do is we divide the price, 475 divided by 20.15. That's going to give them a PE right now of about 23.5, and then we divide that 23.5 right here by their EPS growth rate, which do I have it on my screen right now? It's about 15%. So it's about a 1.57 PEG, right? So about a 1.57 PEG. So even Facebook at these all-time high levels right now with all this growth is still a cheaper company by a lot than Trade Desk by about, about 20, 25% cheaper. That's why we use the PEG ratio, guys. It allows us to compare different companies on a common denominator and see which ones are cheap, which ones are expensive when they all have different numbers of revenue growth, EPS growth, all that. The PEG ratio allows us to put it on the common denominator. So Trade Desk, although it is a good company and nothing bad to say about the company, in my opinion, this Meta is just a much better company, a much bigger player as well, right? Meta can buy Trade Desk pretty much, 4 or 5 times over if they wanted to. So very, very decent report by Trade Desk, but not my favorite advertising play unless it's down here in the 70s when the valuation makes a little bit more sense for me to build a position. So hopefully that's been helpful, guys. That's all the earnings that I had for you today. Now let's jump in right into the technical analysis portion of the video. And you're going to see, guys, that not much has changed, right? So the bulls continue their march higher. Give me a quick second. The bulls continue their march higher, guys. Daily uptrend in full effect right now. Very, very nice move. And we still, we barely have set a daily higher low right now. This little area of consolidation, I would not say just yet that is an area of a daily higher low. Personally, as we're looking on the S&P 500 futures, it gives a more streamlined picture. This is one daily leg higher. So still no daily higher low set. I know it kind of looks like this, but it's really not, guys. We really never lost the hourly trend in a significant fashion to warrant some daily consolidation. This is just one move in my opinion. So as soon as this move tops out, still just looking for a daily higher low for further trend continuation. And now, guys, we've set a lot of space between us and these lows, 499.80. So the likely scenario is daily higher low, and then we will see whether or not the bulls can continue this run. Downside support levels are obviously sitting at about 510 all the way down to about 505, and the moving averages are all curling up and all here as well. So could we expect something like this and then a retest of these highs? Most likely, but look at the SPY, guys. We're currently only about 1% off the all-time highs. The whole time that I was screaming down here that it was a great time for a buying opportunity to raise some cash, right? All throughout this period of uncertainty right here, we were saying raise cash, raise cash, raise cash. When we were down here, there was a lot of very nice companies, guys, big tech companies that were on huge discounts. And there is still a lot of good companies that have discounts for them right now. So still a very decent buying opportunity to get into these markets, in my opinion. Now moving into QQQ. So QQQ largely following the SPY as well. Daily uptrend still underway. And you can take a look at the futures, guys. QQQ is doing a little bit more sideways consolidation than the SPY. So I would tend to argue, guys, that if we do have a break of these highs into tomorrow, well, the daily higher lows will be set for QQQs and not the SPY. So a little bit of a paradox right there, right? One of them hasn't and one of them has. So QQ doing a very good job of pushing to the upside here. Any move lower will still just be looking for a daily higher low for that future daily uptrend continuation. The downside support levels, 435 down to about 427, this green box right here. Huge previous support from the past. We're now back above that, should be able to use it, sit on it, and then rise again, also above our major moving averages. So all in essence, guys, no red flags. And look at the size of this weekly move. We have the weekly downtrend looking for the size of the bounce the whole while that this daily uptrend continues. This weekly bounce continues. And how much of the weekly move have we taken back now, guys? Well, let's take a look. Over 80%. That is extremely juicy, guys. So even, if we have something like this and we taper off daily downtrend, the bulls will just be looking on the weekly to set the weekly higher lows for further trend continuation. And that is if they don't completely V-shape it in one clean shot, right? So looking very good, guys. The bulls had lost the weekly timeframes on a lot of your major indexes, guys, over the past month. But now in just a few short weeks, we've done a great job of giving ourselves a beautiful opportunity, and the probabilities favor the weekly regain of the uptrend. Looking very nice. Now moving on to financials. Financials starting to really break out to the upside. Daily uptrend in full motion right now. So any pullback whenever this move is done. How do you know when the moves are done, guys? You guys must know the drill by now. Loss of the hourly uptrend. If you see the hourly downtrend coming away, well, we are in for a bit of daily consolidation. And at that point, anything above 40.2, just looking for that daily higher low for further trend continuation. All of our moving averages are below us. And this horizontal line, which was previous resistance, should be acting as support. So nice little confluence area right there at about 41.1. Looking very good on financials, and financials as well. Now, right back into weekly uptrending mode, respecting the 12 EMA, using it as support, looking very, very good. And we're almost through our big previous area of all-time high resistance. If we can really crack this to the upside, it'll give us a great, great, great shot at just continuing this monthly trend expansion to the upside as the year moves on. Financials will only get better and better when interest rates come down. Now, moving on to healthcare. Healthcare also pushing to the upside healthily, right? After being trapped in this range of consolidation. Nice daily push higher. Now, whenever this move tops out, just going to be looking for the daily higher low, anything above 139.62, daily higher low for potential trend continuation. Keep an eye on this zone right here, guys, 141.30. Previous resistance now should be acting as support, and all of your moving averages are there. So could we see something like this? Retest and run? Very, very likely in my opinion, right? As soon as this move tops out. So where does that leave us on the weekly? The weekly is actually starting to look a lot better than previously, right? Weekly downtrend. The size of the bounce on healthcare was fairly muted, right? A lot of other indexes put in very juicy bounce sizes, but healthcare has been left behind. Well, at least now they're starting to do a little bit of catch up. The bounce size getting respectable, not quite up to our 618 level. That would be about 144, but still a respectable bounce over the 50% mark. So even if the bears were to take this chart over, right, into a daily downtrend, just going to be looking for the bulls to set up the higher low into a weekly trend change. Obviously, we've been in a weekly downtrend, so now the bulls need to recapture that. And as soon as they set the weekly uptrend anew, you know that your monthly higher low is set and that we're probably due for another leg of monthly trend expansion, looking very, very healthy. I'll remind you, as long as it's still here, one of my favorite healthcare names is currently at a very cheap discount from where it was prior in the year, coming up on a big support level, 158 to 150. Do with that information what you will, but this is one of my favorite companies, and I will be playing it very heavily over the next few weeks in this area. I already have my AbbVie shares. I don't need to add to them, but in terms of swing trades, it could be a very, very good location. Now moving into SMH. So semiconductors performing quite nice on the day, even though for the most part, you know, the sector was kind of bogged down. The index as a whole didn't lose too much, only 0.64%. And the reason that I say it was doing okay, because it's really basically flat over the last 4 days, right? Just pretty much holding up the gains. And that was to be expected, guys. Daily uptrend, just looking for the daily higher low for further trend continuation. Well, we're coming down into our support zone. That is 216 down to about 212. And our moving averages are right there as well. A lot of support below us to set that daily higher low and maybe take another leg higher. On the weekly bounce is quite respectable as well. Weekly downtrend, we were looking how much of this move can the bulls take back. And so far, the bulls have taken back a fairly decent amount, guys. Take a look at this. Taking back about 80%. So even if the bulls were to somehow lose this level right here and set a new daily downtrend, just going to be looking for that weekly higher low for further trend continuation. And that could potentially be with NVIDIA earnings. NVIDIA earnings coming up in pretty much a week and a half's time. So this index, if they can hold up gains, or at the worst case, right, just give us a slight daily downtrend into NVIDIA earnings, and then NVIDIA earnings kill it out, smash it out of the park, well, then we may just be setting up for that next weekly leg higher, and also the resumption of the monthly uptrend too. Looking very good on semiconductors. Excuse me, guys, still a little bit sick. So moving into IWM Russell performing fairly good as well, right? Daily uptrend continues in motion. Daily higher low on the Russell is set, clear daily higher low right here. So now we will look to break the high of pretty much Tuesday. If they can do that tomorrow, well, your daily uptrend simply continues at this point. And the overhead resistance, guys, is going to be that 212 level. 212, very, very important. Prior support back here, resistance. So that is going to be a very big one to watch out for. In terms of your weekly move back, obviously we were in a weekly uptrend. We then lost it by losing these lows right here. So now it's up to the bulls to reset that weekly uptrend. And the size of the bounce, guys, is quite decent right now. We're talking about getting close to a 75% bounce right now. So if ever the bulls lose a little bit of traction here, set the daily downtrend, come back into our big area of support, this big red box right here, right? Prior congestion area, resistance, resistance, resistance should now be acting as current support. We're going to be looking for that weekly uptrend reset by the bulls and maybe march into this 212. So if ever we can't break this 212 right away, you may see a scenario whereby we just have to gather a little bit more momentum down here and then try and smash it once more. Now moving on to the Dow Jones. Dow Jones performing very, very well today and yesterday for that matter. Now, daily uptrend has resumed on the Dow Jones right now. We're now back above our most recent area of big support. So it stands to argue, guys, that when this move tops out, just going to be looking for a daily higher low. Anything above 37,800-ish is going to be looking for that daily higher low for further trend continuation. Below us, we have juicy support all of our moving averages right there and this support box too. So this is going to be acting as a very nice dip buying opportunity for the bulls to potentially just continue this weekly run. Now, in terms of your weekly trend, guys, weekly trend, right? We had the weekly uptrend and then lost it by losing these lows right here. So they lost it. They never set the weekly downtrend. That would be lower high, lower low, right? They just lost the weekly uptrend. So now they have to reset it. How do you reset it? Well, you can V-shape and reset up here, or you can give me a juicy sized bounce and then go for the retest here and then do it that way. So that is the most likely scenario in my case. The Dow Jones already bouncing 78% of the move. So if we do top out here and go for a little bit of a retest, could be a great chance to get in and potentially benefit from this run. Looking very, very good. And in terms of the monthly, guys, the monthly was never at risk of losing anything. Still a gorgeous monthly uptrend, looking for further continuation through 2024. Now, that's pretty much everything for our major indexes. Now let's jump into big tech names right away. So in terms of Apple having a very decent day here, 1% to the upside, and now finally coming out of its earnings consolidation, right? So Apple was never in jeopardy of losing anything, right? Healthy daily uptrend, little bit of consolidation for earnings. And where were we consolidating, guys? The exact location I told everybody to look out for, right? This 180 down to about 178 pocket, a juicy level for opportunity, right? Especially if you're writing options down here, such a juicy level. Just looking out for the daily higher low for the potential continuation of this daily uptrend. Now, it does appear that our daily higher lows are set right here, but if ever for some reason Apple fails and sets a daily downtrend, is it a big deal, guys? No, because what are we looking for on the higher time frames? Well, it's a weekly engulfing move, weekly downtrend, engulfing move. So if they do ever fail here and lose this and reset lower, we're just going to be looking for the weekly higher low for further trend continuation. This would be an amazing trade if it comes to us, guys. If that trade comes to us, I will probably be loading up on some calls, and this would be just a great opportunity, guys. Just look at how nice this whole area is. Support, resistance, our moving averages are here on the weekly. Very important, right? Could just be looking for something like this. Looking very juicy on Apple either which way, guys, whether it continues to the upside or presents us a further buying opportunity. I do think this one is going higher. Now moving on to AMD. AMD not looking the best, but not looking the worst either. 0.8% to the downside right now. AMD still just struggling, guys. So we've been in a daily downtrend this entire time, right? No secret there. So the most recent leg of this daily downtrend can be seen right here where they flushed. Now it's up to the bulls to set in a nice bounce, which they did. The size of the bounce was fairly respectable, right? About a 78% bounce. Now what we're looking for is that daily higher low for the daily uptrend reversal, which we haven't had a daily uptrend on AMD since all the way back here in February. So that would definitely be notable to us. However, if that does happen, we are coming into a big area of resistance above us, this red box, 165 to 158. Prior support right here, and it is the previous area of your prior all-time highs. So that area could be a little bit challenging for the bulls. So we'll take this one day at a time. And obviously, if we move lower, guys, well, anything above 140, 142, still just looking for that weekly higher low to then reset into a daily uptrend, guys. If we come too low, however, there could be a nice trade opportunity down here, 142 to 133. I'll be looking at the lower 130s to maybe write some puts down here because that is our next juicy area of support. So the bulls still have a lot of work to do, guys. But if the overall market continues carrying us to the upside, you could maybe be expecting that daily trend change to happen on AMD. And if we finally get that, then we will need to measure the size of the daily uptrend in relation to the weekly move, right? Can they reverse the weekly uptrend potentially down the line? Now, moving on to Amazon. Amazon looking very good, guys. Nothing bad to say about Amazon, right? Up 0.8% today. Very healthy daily uptrend right now, right? This is pretty much just all one move. So as soon as this move tops out, and that will be notable by a loss of the hourly trend, hasn't really happened so far, right? They tried to cut these lows a little bit. I wouldn't really say that that's an hourly downtrend. You would usually need to see a lot more continuation. So still just one daily move higher as soon as they're done. And they want to consolidate, guys, anything above 175, just looking for that daily higher low for further trend continuation. Moving averages are going to be a nice first area of support, and your previous resistance here, 183. This little pocket right here could be a nice location, maybe for a nice Amazon trade if you're not already in. Right. And obviously, guys, if for some which reason we break lower and come back down under 180, ooh, that's going to be such a juicy buying opportunity. The weeklies are looking gorgeous, guys. Beautiful weekly uptrend. So any move lower, just going to be looking for that weekly higher low for further trend continuation. And Amazon is still just doing one last thing battling with the prior all-time highs. We're almost through them. I mean, we are at a new all-time high, but we're not clearly above them just yet, right? But looking very good. Would not be surprised, as I've said for the past couple of weeks, would not be surprised if we see Amazon at $200 within the next 1 to 2 months. Moving on to Google right now. So Google not looking too bad either, continuing its grind higher. So daily uptrend clear as day on Google. Now we just continue higher, but need to break 176.26 to continue that, which is the all-time high. If ever Google fails before that, well, there's a few things that can happen. We can either go into a tightening range, or if ever we lose these lows right here, 164.75, well, is that a big deal? No, because our higher time frames are still extremely bullish. It's a gorgeous weekly uptrend right now, guys, right? We'll just start it pretty much from right here. Weekly uptrend is very nice. Any extended pullback, just gonna be looking for that weekly higher low into further trend continuation. My preferred area for Google, if it does come back here, maybe looking at some more aggressive calls, will be 160. If we can get 160 or around that area, could be a great location. Retest this 12 EMA. Look how well the stock has held the 12 EMA for the most part. So it could be a great opportunity for me to continuously play some short put options and maybe even some call options too. Moving on to Meta stock right now. Give me a quick second. You know, I have a Celsius energy drink in the fridge right now. I should have pretty much brought it on the channel and claimed that I'm being sponsored by CLH to pump my bags of the energy drink stock a little bit, right? Now, moving up to Meta. Meta looking very decent here, guys. Daily uptrend well underway. We are coming into that very hot area of resistance. However, this yellow line, 480, we're now beyond most of our moving averages, but this level of resistance, guys, is going to be a big one. If ever Meta can't get through this on one clean shot, they have tons of space, anything above 427, tons of space to regather some momentum and try to smash it one more time, right? So Meta stock looking incredibly good, recapturing most of your earnings crush. And on the weekly as well, the weekly move is looking very good, right? They lost the weekly uptrend when they lost these lows right here. Now the bulls are trying to reset this. So if ever we stop out here, let's say we do something like this and then reset a bit lower, well, the size of the move, guys, the size of the move now is fairly good. It's about 50%. So if we can get up to this yellow line right here, 483, there'll be about a 60% retracement, would give the bulls a very good chance at the two-step weekly recovery. And obviously, guys, if we just blast through it, that's the best case scenario, right? Then we can get above this, sit on it, and then reset this to the upside. So Meta stock is looking extremely strong. And even if you think you missed this dip down here, we just did the valuation in our earnings. But for anybody who skipped it, the valuation 1.57 peg at $475, guys, is really not that bad at all. The free cash flow yield is crazy on Meta. Still one of my favorite stocks in the market right now for the potential for growth upside. Now moving on to Meta. Now moving on to Microsoft. So Microsoft up a healthy 0.43% today, right? Microsoft doing what it does best. Really boring days across the whole, right? Very boring stock because it's just so consistent. Daily uptrend trying to be reset by the bulls at this point, right? Daily higher low is set. Now we go for the daily trend expansion, right? So if we break 415 pretty much, that'll be a nice new daily uptrend for the stock. We will be getting clearly above this big line of resistance that's been acting against us in the past. If we can get above here and then maybe sit on this area, could be a very nice trade for some juicy upside. We're now above our moving averages, so looking very good. If Microsoft fails this, however, well, we do have a nice level of support down here, which is this yellow line right around that 400 mark, right? Previous support of the range. Could be a very nice trade opportunity as well if we revisit some of these lows, setting up maybe for this weekly trend reversal pattern as well, right? Well, then we are probably going to be trading here the short puts on my account below 385. So all in all, guys, nothing bad to say for Microsoft. For you to be truly safe and confident that this stock is ready to break out, need to see a break of that 415, sit on it, use it as support, then move higher. Then you'll be guaranteed almost that your weekly uptrend is back in motion and that we're on for another leg of monthly continuation. Looking very good, guys. Now moving on to Netflix. Netflix also not looking bad at all, right? Up 0.43%. And the move of Netflix after earnings is pretty much like Meta, right? any company, excuse me. So any company, guys, that is currently that had bad earnings reactions from the market, but with really solid fundamentals, has been able to claim them back. Think of Meta, think of Netflix, right? Just two that come to mind right now. Looking very good on Netflix. Daily uptrend clearly in motion right now. As soon as this move is topped out, any pullback looking for a daily higher low, anything above 545, looking for that daily higher low for further trend continuation. Now, we could stop in a few key locations. Number one would be this support that we just got above. 601, this yellow line right here, that could be acting as support. But if ever it doesn't, well, we do have our moving averages down here at about 589. So this little pocket right here would be a beautiful location, set the daily higher low, and move on to the trend continuation. In terms of our weekly, guys, weekly is looking very good as well. We had the weekly uptrend on Netflix, right? And then lost it by a loss of these lows after our earnings. Now the bulls have created so much space off the lows. Look at the size of this bounce, guys. 80% bounce on this stock. So if ever Netflix loses these levels and starts downtrending on the daily, we're just going to be looking for the weekly higher low for weekly trend expansion, right? We need to get this weekly trend back. And when that happens officially, your monthly higher lows will be set. We will be on to a next leg of monthly continuation, potentially to the all-time highs over the course of this year. Looking very good. Now moving on to NVIDIA. NVIDIA down almost 2% on the day. Not too bad of a day for them. Just some more sideways consolidation, right? I know we're so used to NVIDIA going up or down 4, 5, 6% per day, but sometimes NVIDIA just chills and does nothing, right? So daily uptrend, very, very healthy here. Just looking for a daily higher low, anything above 813.60. Daily higher low for potential further trend continuation. Now, we are above a few key levels that are acting as support if ever we do continue this pullback. Coming into a few now are moving averages and this big 850 line of support, right? So could be looking at something like this for potential further trend continuation. No red flags with the stock. In terms of our weekly, well, NVIDIA never really lost the weekly uptrend at all, right? Set the weekly higher low, and now we're trying to recapture as much of this move as possible to continue this weekly uptrend. However, if ever NVIDIA stays relatively muted before earnings, could just be into a little bit of a tightening range on the weekly, right? Even if it moves sideways for the next 2 weeks prior to earnings, it would not be such a bad thing. That would just be a very nice tightening range here at the tops. I know this is on a weekly, so the earnings are right here, right? So we're not going to get the full follow through from this, but just a little bit of an idea, right? If we could potentially come into that if earnings are ever underwhelming, to say the least, right? I don't believe if earnings are underwhelming, NVIDIA is going to set the weekly downtrend. It just may consolidate and grow into its valuation. So that's a potential take on that. And obviously, if earnings are bullish, right, we could just get something like this massively. So NVIDIA, nothing bad to say. Earnings are coming up the 22nd of May. Obviously, you guys know my buy location. I would be more tempted to buy towards the lower end of this, 750 down to 700, but there's no telling if they're actually going to get that far. That's just where I personally am more comfortable acquiring NVIDIA positions. Now, moving on to Tesla. Excuse me, guys. Still a little bit sick, but should be over this cold by the weekend. Now, moving into Tesla. So, Tesla still downtrending right now. Daily downtrend well underway. After this such a nice move to the upside, right? We were looking, can the bull set the daily higher low and continue on this daily trend change? Well, the answer was unfortunately no. So, what are we looking for right now, guys? Daily downtrend. We are looking for the weekly higher low. Tesla is trying to break out of this weekly downtrend. We have a nice engulfing move on the weekly, but as I said, guys, the problem with Tesla right now is that although their quarterly earnings were good, they weren't good for the right reasons. Elon Musk gave us a lot of hope for 2025 to be a very good year. Think robo-taxis, think a new Tesla model, potentially around the $30,000 or $35,000 mark, a cheaper vehicle, right? So he gave us a lot of hope to look forward for 2025, but he didn't really give us any fundamental valuation or financial metrics that will be improving over the next 2 quarters, right? So although the Tesla recovery story is a good one and is a likely one, maybe that'll only start manifesting in the company's financial statements only towards the end of this year or maybe even early 2025. So that's why Tesla is really not able to hold up much in terms of gains right now with their current financials. Even at 170, the stock is still a little bit expensive. It really comes into fair value down here around the 140, 150 mark. Now, that being said, guys, it's up to the bulls at this point. They've created the space for it. Can they set the weekly higher low and change this into a weekly uptrend? We have not had a weekly uptrend on Tesla pretty much since last October. So it's been a very, very, very long time coming. We'll see if they can do it. Our last area of support are coming up on there quickly, guys. 165. If we lose 165, guys, it's not going to be looking good, right? If the bears take back too much of this move, you could just set up, at the best case for the bulls, sideways consolidation. At the worst case, well, you may just roll over the weekly one more time, right? So we're going to keep our eyes peeled on Tesla. I'm still not playing this one aggressively just yet. Very cyclical company. I do believe that The better time to be trading this one is going to be around the time where interest rates are scheduled to come down. So think late summer, early fall. Now moving on to Palantir. And Palantir still trying to recover after their earnings. Their earnings actually weren't that bad, but they still got hit nonetheless. We covered them on the channel, right? So it was a daily uptrend. And then we got the flush, losing these lows right here. So unfortunately, the bulls have to start everything from scratch. Need to first get the daily bounce. When we get the daily bounce, as usual, we'll measure the size of the bounce in relation to this downside momentum, guys. What I would like to see from Palantir to regain all of this, we need to get back above this $23 mark, guys. If we can get back above 23, it gives the bulls a great chance of then sitting on 23 and changing this daily trend back to the upside. First, we need to get above the moving averages, though. And all while Palantir stock is down here, however, still a very juicy buying opportunity in my opinion. $20, $19 writing short puts, guys, right? Gorgeous area of support. Resistance should be acting as support again. The bulls are really trying to find their bottoms right now. And as a whole, the monthly timeframes do support you guys. So the bulls are with us right now, looking for that monthly higher low for further trend continuation. That's why I say the lowest that I think that this stock can maybe go before getting a significant bounce is the lower end of that, around 19. Then we get into the monthly moving averages, should create a very juicy reaction to where we might be able to continue this monthly leg higher. So all in all, Palantir stock not looking too bad holding these lows, but the bulls need to get their act together. We need to start reversing this into a new daily uptrend. Still though, great opportunity to be shopping for some Palantir if you like the company. Moving on to PayPal right now. PayPal coming up 1%, but PayPal is still kind of stuck in the mud right now, right? So daily downtrend clearly underway right now, right? So as soon as the bulls muster together a rally momentum, which they seem to be trying to do right now, we're just going to be looking how much can they get back in terms of the 66.80 mark. If we can fully engulf it, gives the bulls a good chance at resetting this daily trend to the upside and really continuing our weekly momentum higher, right? The weekly chart is not looking the greatest on PayPal right now. I will agree with you, right? So weekly uptrend, yes. We failed with the double top. Now just maybe into some sideways consolidation. As long, however, as the stock maintains above 63 to 61, I still think that that is overall bullish conditions for PayPal, right? And on the flip side, if we can break $68 and close a weekly candle, we still haven't been able to close a weekly candle, guys, above 68. If we can close that weekly candle above 68, it will show weekly trend continuation. And at that point, the next stop is going to be 75 because there's really nothing in terms of resistance much before that $75 mark. Well, in actuality, right, 73 all the way to 75, that is the zone we should be targeting. So all in all, PayPal still just consolidating sideways, still acting off of this support. But all in all, guys, PayPal going through a transition year right now until this company shows that their fundamentals are largely improving. Think free cash flow going higher, think also net margins going higher, and think revenue growth, because this company has just slowed down tremendously. It's not the same company it was in 2018, 19, and even 2020, right? So they need to show us that they can get back to the good old growth that they used to have, and only then will this stock really start catching heavy bids from Wall Street. So that's pretty much everything I had for you guys in terms of the stock market today. Now let's take a quick look into my portfolio. All right, guys, so taking a look at the portfolio right now, you can see that all the trades that we were able to close, these were all earnings plays. Most of them worked out very, very nicely. We only took one loss, and unfortunately, that was Roblox. So Roblox, guys, we wrote so far out of the money, and still it came really close to our level of assignment, which was $29. Now, we did take the next Friday plays, right? So when it came all the way down here with 1 week left of time on it, even though that we were above my strike price, I still took the loss on this one, guys. It's just not a high conviction company for me. It was just a company that was looking to make an earnings play on, right, in the lower level of our support. And I was not expecting the company to drop this much, I was to be honest with you, right? The expected move on Roblox was about 10, 11%, and I wrote 26% out of the money, and it still came down here as the company just continues to struggle with profitability. So we did take a little bit of a loss there. You can see, I'll show you the exact trades just so you guys can see the actual numbers. So we wrote these yesterday pretty much. We wrote 3 contracts yesterday on Roblox, right? 2 up here, 1 down here for 10 cents a pop. That's how far we were out of the money. We really didn't get much premium for them. And we closed them this morning, not at the peak price, but we closed them kind of right in the middle. If I would have waited a little bit more, maybe an hour more, 2 hours more, something like that, I could have maybe limited the loss a bit more, but I just wanted to get out of the position, guys. I waited for it initially, but obviously you don't know where the market's going to go. So when I don't have high conviction in a company and I was just looking to make it for an earnings trade, well, you just take the loss sometimes. As you guys have seen, guys, I take my wins, I take my losses. I'm very transparent on the channel with it, and I try to vocalize my thought process for the whole thing, right? Just not a high conviction company for me. You can see we closed them at 70 cents. So we lost 60 cents per contract times 3. It's about $180 loss. Now, where does that leave us with the other rest of all the positions that were profitable yesterday that we closed at a profit? Well, I did my good old notepad right here. So you can see that for the most part, everything we pretty much closed all the way worthless, right? A few of these contracts, whenever you see, well, Airbnb, this 140 put, we closed it for 6 cents. We maybe would have been able to wait to close it at 3 cents, but I mean, the difference between $6 and $3, not that much. Still a good trade. The reason that you'll see sometimes some of these 5 cents that I can't get rid of is because a lot of options, guys, only trade in 5-cent increments. So I can't close them at 1 penny or 2 pennies. It's either 5 pennies or you wait until they're pretty much all worthless. So for these, respectively, guys, especially the the hood ones, as a matter of fact, they're 5 contracts. We close them at 1 cent each, but since we're measuring times 5, well, that's why you see 5 cents here. So those were closed, but the APPs, those ones were only monthly options for next Friday, right? So obviously there's still a little bit of time value left on those contracts, even though they're far away from our price. So we weren't, I set them at a penny all day and nobody was taking the bid. So sometimes you just have to close them at 5 cents, which is the minimum bid on certain options that trade in 5-cent increments. For the most part, fairly good. One of our trades is still open, and I'll explain that in a little bit, which is Duolingo. All in all, guys, $142 in realized profits for the day. Not the best day. It would have been a lot better, obviously, if we didn't have that loss on Roblox. And obviously, if we were able to close the Duolingo, there's $80 here still left in Duolingo, which would have pushed this amount over 200. But I'm holding on to this one. I like my strike price, and I wasn't able to close it today. We're going to go over that very shortly. As a matter of fact, let's do it right now. So Duolingo, we had those 185 put option contracts, and the stock came down heavily today, guys. Was not expected. This is actually the worst single day performance in Duolingo's history. Their earnings weren't traditionally that bad at all. Just a question of future guidance. We've seen this a lot, right? Where companies are missing future guidance by 1-2% and get a 10-20% haircut on their share price. That's just the environment that we're in right now. So 185, decent level down here. I'm happy with it. We have 1 week left of time on these options. So my plan is to let tomorrow play out and also let these ride through the weekend, because every single day that goes by, the time value gets removed from those contracts. So I should be able to close these maybe on Monday for a significant profit if the stock remains relatively at the same levels or even has a little bit of an increase. So that's my logic behind Duolingo. And you can see that the trade Duolingo, I do still have it. It's right here. The 185s, I wrote them for 80 cents, and I could close them right now for a tiny loss, $1. Even at some point today, I was pretty much break even on these. But I'm just going to let these ride for a little bit more and let time decay work in my favor, as I'm pretty happy with the level overall. And even from here, guys, that would be roughly an 8-9% drop. I don't really see Duolingo dropping another 8-9% next week, but we'll see. Obviously, anything can happen, right? Now, moving into the trades that we took over the course of the day today. So we still have the SOFI calls. That's nothing new. The Palantir short puts are also still here. That's nothing new as well. The ones that are new, however, we did make a play on Mara earnings, the 15 puts for next Friday. And that's the Bitcoin mining company. So we went very conservative with Mara. We wrote the $15 strike. The $15 strike is really at these lower levels of support. And that would have been a drop of roughly, let's call it 24%. I know Mara sometimes swings violently. The reason I was comfortable taking this trade on a Bitcoin miner is just because, guys, cryptocurrency volumes have been higher as of recently, and I trade crypto every single day. And I saw the mining fees that were being paid to miners all throughout this quarter, and they were higher than usual, which gave them a very good net margin for the quarter and very good EPS as well. So I was fairly confident in this trade, and it should be pretty much worthless tomorrow. Mara ending in the after hours right now. I mean, they're pretty much trading right around where they closed as a whole. So I should be able to close these for almost nothing tomorrow, maybe a penny or two. So fairly happy with that trade. That's another little profit there. ACAM, semiconductor play. We took those for earnings as well. We took the 84 puts. We got 30 cents for them. Fairly decent amount of premium for what it was. ACAM coming in after the bell here, completely crushed after earnings, guys. So we came down 11%, right? But where did I write my options? I was being extremely conservative with this one, right? You can see the strike right here, 84 puts. 84 puts would have literally been, almost 20%, about 18%. That was twice the expected move, writing 18% lower. So I'm fairly confident in the fact that these expire tomorrow, and I don't think ACAM is going to open or even close below 84 tomorrow. We still have a lot of wiggle room to the downside in the event that that does happen, guys. So fairly happy with that trade as well. Now, we also wrote HR Block, the tax company, right? So HRB, fairly easy play in my opinion, guys. Q1 leading into April is pretty much tax preparation season, usually one of their best quarters, with a very big area of support down here as well, which is the one that I was targeting. And you can see the stock was trading at about 49 prior to their earnings, and we wrote the 43. So we even went below this support area, and we even went below the 200-day moving average. 43 is all the way down here, right? Our prior levels of support down here. Was fairly confident with that move. The expected move on HR Block was just about 5%, right? So that would have put us pretty much at 46. I went literally double that, about 12% to the downside. So should be able to close these. These are for next week. Another stock that trades in 5-cent increments. I got 25 cents, so I'll probably be able to close these for 5 cents tomorrow. The other ones, guys, are still standing since we're wrapping up the week now. Duolingo, already explained. Apple, probably going to be worthless by tomorrow. Tesla also, well, fingers crossed, we close above 167.5 by tomorrow. Would not be surprised if we do, unless Tesla has a negative 2% day. And we still have those little tiny Uber contracts, right? I should have closed them at the end of the day today, but we're leaving them open. Still some profit left on the table. The rest of the swing trades haven't changed. I still have my Amazon Leap call, my MELI shares, my SHOPIFY position that we're writing those covered calls on, right up here. Those are looking fairly juicy. Overall, guys, it's been a fairly good week so far. I'll do a full tally of profits tomorrow for you guys because we still have some positions open. We still have the Duolingo, that's $80 right there, right? We still have the Tesla puts right there, that's $44 as well. So we're up to 120. We still have all of these, these short put plays that are unrealized as of yet. And we also have the Apple play and the SoFi calls play. So all of that combined, guys, should give us a fairly good week in terms of realized profit. Yes, we did have a few big losses. The one on Shopify, we took a loss on Roblox as well. But as a whole, guys, we should be able to come relatively close, in my opinion, especially with tomorrow's realized profits. Should be able to come close at least to maybe, let's call it between $700 and $800 in realized profits this week, which is not going to be too bad at all of a week, even despite our losses. So fairly decent there. Nothing bad to say. It's not as good as a week as last week, of course, but at least the portfolio really hasn't dropped this week at all, right? Actually, $700-800, maybe a little bit on the high side, maybe closer to about $500-600 if I just do the mental math in my head right now. So all in all, guys, looking fairly good. Nothing bad to say with the rest of these trades. I'll do a full profit tally for you guys tomorrow. So hopefully you guys enjoyed that process. And tomorrow, next week's earnings are going to be fairly lighter than they have been in the past 3 weeks. So I'll be getting a bit back more to the traditional wheel strategy, right? Where we just write options on a Monday and wait for them to expire on a Friday. So with all that out of the way, guys, hope you guys enjoyed the video. And if you did, consider dropping a like. Would really appreciate it for the algorithm. Consider subscribing to the channel if you're new. We'd love to have you here. And as usual, guys, if you have any questions at all, stocks, technical analysis, options, plays, anything you want, leave it down below in the comments and I'll give you an answer back in the first 24 hours. So take care, guys. I'll see you tomorrow. Happy trading and peace.